Good morning. Say yes in the chat box so I can start the session. Can you hear me? If so, yeah, okay. Right, thank you. Right, so we have been talking about NBFI sector, what we are doing. Then we looked into some products. Now we have been discussing on stocks, and today we will end this session on stocks. I hope you can see the slides. If not, send me a message. Right, so we talked about rights, bubbles, and how the bubbles are created in the stock market. We talk with an example of US, how the bubbles got bursted, and the formation of bubbles. And we said even the cartoonists said that bubbles are not ending just by having a dot-com bubble. Then we looked at SEC, Securities and Exchange Commission. What are the institutions coming under its purview? Then we looked into stock analysis, how you are going to analyze stocks. For that, we looked into two sides. We looked into fundamental analysis. Then we took an example of a person who invested after analyzing fundamentally, and with time, his growth fund was growing. And he said, I was late to start. And he was very patient. Then we compared that with the technical analyst who just looked at charts. There are different types of charts, candlesticks, Fibonacci. We took an example of Fibonacci. And I showed you another great investor who is a trader. He's not a fundamental analyst, so both ways you can win. Now, who is a stockbroker? Stockbroker is a person who buys and sells on behalf of a customer. And his earning is commission. Okay. Now, Warren Buffett, before becoming an investor, he was a stockbroker. Later, he wrote a book about his his life, his autobiography, Snowball. In this book, he says, stockbrokers always ask you to buy and sell in a very fast manner. So a stockbroker would ask you today buy, and after 10% growth, he would say, can you sell it now? Okay. Right. So what is happening? The stockbrokers get their earning as a commission. When you buy, they get a commission. When you sell, they get a commission. Means what? They prefer the more you buy and sell. But that is not a long-term investor looking at. He want to hold. So stockbroker is making an income by buying and selling on behalf of investors. The investor can be retail or institutional. So there are two categories. Retail investor, a large number of investors who invest in small quantities. Where institutional buyers, the number is less, but they buy in big quantities. Then share underwriting. Okay. Now we'll first discuss a little bit, then we'll move into underwriting slide. Okay. Now, when you go for the share listing for the very first time, we call it IPO, initial public offering. There are a lot of documents to be filled, and your company is not having first-hand experience before this. So you need the assistance for filling these documents, getting advisors, promoting the shares, In addition to that, you are worried. I need 8 billion Sri Lankan rupees by issuing these shares. But I wonder whether I will be able to get this expected amount. Okay. So when you have these questions, there is a part who is ready to assist you. We call them fine undertakers, share undertakers. What they do? Number one, they will subscribe all the shares that is not subscribed by the general public. Okay. Let's say People's Leasing Company issued 8 billion Sri Lankan rupees, the second biggest IPO in Sri Lanka. And when you are asking from the general public to subscribe for this 8 billion, you are not sure whether you will get this entire amount subscribed by the general public, allowing you to raise 8 billion. What if an individual or the institute agrees whatever the remaining amount the general public does not subscribe, I will buy? Then your headache is taken out. So that is share underwriting. So the underwriters undertake to subscribe all unsubscribed shares. What is their intention? They will buy shares at the IPO, whatever remaining, and later at a profit they will sell. So that's one duty of share underwriting. Then you want to know a lot of information. What is the exact time? What is the best time to go for this IPO? Now, there were no IPOs for last couple of years, but within this financial year, we see Windforce, then Jet Holding. One by one, companies are trying to get listed, and all of them get fully subscribed so far. Means what? The share underwriter advise you, this is the best time to go and get listed in stock market. There's a very high probability your share will be fully subscribed. So you need this advice. Share underwriter gives you this advice. Then on the quantity to be issued at what price, these strategies will be assisted. Share underwriter advise you, okay, instead of offering 1,000 shares at 100 rupees each, we will make it more affordable. So we will split the share. 1,000 shares at 100. No, 2,000 shares at 50. No, we can further divide. 4,000 at 25. 8,000 at 1250. Okay. 1250 rupees per share is affordable. So in general public's way of thinking, okay, I can buy small quantities, small shares where the price is less. So we prefer to go for 1250. Now that advice, what would be the right price for your share? What is the right quantity? How are we splitting these shares? That advice is given by share underwriter. Then you need a lot of promotion campaigns. You have seen before the IPO is released, the shares are released for the general public in the very first time. You want to know about it. Somebody should tell you. There must be advertising campaign, a promotion, road shows. So the share underwriter organize a lot of promotional campaigns on behalf of you. Okay. Then you have to develop a booklet called prospectus. Share underwriter assists you in developing this booklet called prospectus. Whenever you are issuing shares for the general public at an IPO, there are information which general public should know. You provide this information by way of a booklet. That booklet is known as a prospectus, share prospectus. Okay. So this prospectus includes last 5-year profit and loss situation. Up to now, who are the top 20 shareholders? Up to now, who are the shareholders of this company? What is the objective of issuing these shares? Then what are the risks that you see in near future to this company? So all this information are issued by way of a booklet. Share underwriter prepares this booklet. Okay. Now you have enough information about who is the share underwriter. Okay. So share underwriter. We'll just read the slide. The process of underwriting a stock or a bond issue requires that the investment banker purchase the entire offering at a predetermined price and then resell the offering. Means what? There is a guarantee whatever the shares that are not purchased by the general public would be purchased. In addition to that, you are given advices, filling documents, underwriting, best efforts or private placement. Okay. Now, what is private placement? Private placement means before, okay, it's not to the general public, but between the known parties, shares can be sold. Now, SEC always looks at what is happening in the market, what is unfair, and comes up with certain directions to overcome it. There was a time before shares issued to the general public, private placements are taking place. For an example, let's say, just an example. Before shares are issued to the general public at 12 rupees, I, being the owner of this company, sell shares to my close friends and relatives at 6 rupees, 50% down from the general public's offer. And my friends and relatives buy at 6, and at the IPO, they can sell at 12. Okay. Now, that issue is by now removed by SEC. If you sell your shares by way of private placement before the IPO, you have to hold that shares for 1 year without trading. That is the SEC direction on that. Okay, so what is private placement? Selling shares to the known parties. Okay, so that's happening sometimes well ahead of IPOs. Underwriting best efforts of private placement. Portfolio management. Okay, now can you all see the slides which I have sharing? Say yes. Can you see the slides so far I have been sharing? Because I'm going to show you another PDF document on share portfolio. Slides, have you? Can you see the slides so far? Okay, please wait. Now I'm sharing a slide. Portfolio management. Can you see this slide? Portfolio management. Can you see the slide? Okay, so that's what I'm asking, right? Now I'm showing you, before moving into this one, portfolio management. Now, what is a portfolio? I'm going to show you a portfolio. Now, this is a share portfolio of a person who invested in Colombo Stock Exchange. Let's first go down and see how much he has invested and what is the market value. You can see he has invested in many companies. He has altogether invested 24 million and the market value is 53 million. Okay, so he has got more than 100% gain by investing. Can you see that? Say yes or no. Okay, could you see this set of slide where The investor invested 24 and his market value, yes, very good. Now that's okay. Now that's a portfolio. What is a portfolio? There are many companies he has invested. Let's take one example. TPL.N0000. Right. TPL stand for a code that is representing Talawakale Plantation Limited. TPL. N, nominal share. Sometimes you will get a code N. Okay. Always you will get a code. N stand for nominal share. If it's W, that is warrants. If it's X, non-voting shares. Okay. If it's R, that is rights. Okay. Now in this case, the investor has invested in Talawakale Plantation at 1630. His cost is 1630. And today the market value is 47. Okay. So he gets about 6 rupees dividend per share. We look into another investment. So his profit of holding this is double the amount he has invested. Okay. We'll see another one. Richard Peary's exports. He has purchased at 62 and the market value is 394. He has invested 1.5 million. Profit alone is 8 million. Okay. And the dividend of Richard Peary's exports is 25 rupees per share. It's almost 40%. Okay, so it's like if he has invested this 1.5 million in a bank, fixed deposit, he's getting 40% interest per annum. Okay. So the Richard Peary's exports, for his cost, the dividend yield is 40%. Okay, we'll look into some other investment of his. Central Industries, that's the company which is manufacturing National PVC. His cost is 28 and the market value is 113. So he has invested 2.7 million. Profit alone, not the market value. Profit alone is almost 8 million. Okay. So he has managed his portfolio well. It does not mean he's always making profit. It's a demo. He has purchased 100 shares at 886 per share. But today, the market value is 500. He has ended up with a loss. Okay. Now I'm asking you very simple questions. You have seen his portfolio. Okay. Right. He has invested in demo. And by this investment, he is making losses. Can someone tell me why? Why is he making losses by investing in demo? What is demo? My dear, we are living in Sri Lanka. I'm talking about Sri Lankan examples. Yeah, can someone tell me? Very good. Tata, another product they are selling. Tata is one brand. What is the superior brand of them?
Mercedes-Benz.
Very good. Right. Now, tell me why this investor is making losses by investing in demo. You know the reason. Why? No, Benz is not outdated. Tata is not outdated. I mean, their brands are, their products are always changing. The reason is very clear. At this moment, there is a restriction on vehicle imports. Okay, so the authorized agents of vehicle imports are not having a good time. Okay, and being the investor, the sentiment is not positive for vehicle importing. This is why I said market is a collection of investors, right? And we took another example. Let's say, okay, I'll take another example very quickly. But mind you, he has only 100 shares of demo. We'll take another example. LWL. He has 27,000 shares. Cost is 13. He has invested just 373. And the market value is 67. Profit alone is 1.4 million. Okay. Can someone tell me why he is making a good profit out of Lanka Volatile? He's making a profit out of Lanka Volatile. Why?
Now it's produced locally in Sri Lanka.
Yeah. And there is an
Means
import restriction.
import
Very good.
restriction.
Very good. There's import restriction, and almost all the tile companies are doing well. Okay. Now that's where investors have to think. Suppose he was having a very good chunk in demo and he understand in the near future there is no chance for importers, so he has moved into manufacturers, local manufacturers. Local manufacturers are having a good time. Means what? If you are the investor, you must be able to take decisions very quickly, and the decisions must be right. Then only you can make a profit out of investing, like this person. Okay, so he's making a very good capital gain if he sell the entire stock. If not, he can be happy with the dividend yield. Okay, still it's more than bank FD rate. Certain shares he gets about 40% return just as dividend yield. Okay, now you can see how much he has diversified into so many fields. He has invested in local manufacturing, plantation, hotels, okay, and banks, rubber, okay, another plantation company, okay, right. So you can see his diversification, right. Now we are talking about portfolio management. Portfolio management career relates to creating the investment portfolio for clients, right. So you have what you have already seen as investment portfolio, but only in equity, only with shares. And manager is responsible for proper structure of assets. Yes, so the structure is good. Whatever earning foreign exchange is doing well in Sri Lanka now. Richard Pires exports, Talawakale plantation, Namanukula plantation. So you are sending something, you are exporting something, and you are good. And you have structured it's in such a manner. Now we have reduced, leaned the importers. Okay. Structure of asset liabilities and making strategy for the best investment returns and less risk. Okay, so the investor is not blaming government. Okay, so you may have 101 reasons to blame the government, but that is not making you gaining you any profit. Here, instead of blaming the government or its policies, he has shown by adjusting your portfolio, you can make profits, right? Economy is not in good shape. Yes. Credit ratings are not in good shape. Yes, but he's making profit. That's where, okay, his returns are good, less risk. Yeah, he's not taking a high risk. Where career in portfolio management is started by having proper knowledge of equity research and financial analysis. Yes. Now you can see this investor has done immense research, enough research, and analyzed the financial statements of the companies. With that, he has invested properly. So if you become a portfolio management, that's what you do. You will advise your customers, clients, this is your portfolio. Let's invest in this side and let's avoid this side. Okay, so you will have a personalized investment plan rather than suggesting a similar plan for everyone. Okay, one simple question again. If you happen to be an investor, if you happen to be a portfolio manager, will you arrange the same portfolio for a young person and for a senior citizen? Say yes or no. For a senior citizen, will you invest his money? No. Yes, good. Answer is no. Correct. Why? We have seen the example. In 1929, when the stock market crashed, it took 24 years to recover. Means what? If I'm investing on behalf of a senior, if I'm investing on behalf of a senior citizen, say he's 90 years old, and if the market crashes today, he has to hold his money for 24 more years, which is not practical. But if it's 20 years, he has enough time. Okay, so my portfolio management would be different from person to person, means I'm personalizing. Be able to make good decisions at the right time. Yes, right. So I must be able to predict how long can government go on this path. Can we always continue with this bigger thy neighbor policy? Bigger thy neighbor policy means I'm not importing anything, but I want to get the maximum out of my exports. We call this bigger thy neighbor policy. Okay. How long can we continue like that? We are not importing tiles, but we are locally manufacturing and we want to export them. Okay. What about GET? What about free trading? Keep in touch with client and keep him or her update on regular basis. Very good. So that's what portfolio manager is doing. Right. At this moment, exporting tea is fine, but we are worried about fertilizer issue. Let's keep an eye on it. And if the things are not in good shape, let's sell Talawakale plantation and hold money and decide what can we do next. So that's what you are saying. Be transparent and honest with your client. Yeah. Keep himself updated with the latest changes in the financial field. What's happening? Okay. When Sri Lanka is downgraded by this credit rating agencies, what is the impact? Okay. What's happening with COVID-19? Okay. Educate the investor about the types of investments available, the returns expected. Now, last week I said ASI will surpass 8,000 and after that there will be a slightly upward trend, and it happened. So you must be able to predict either with your technicals or with some kind of fundamental backing. Whatever it is, you must try to show the customer, your client, your investor, that you are well updated. Now, last Sunday Times ran a nice article. The headline was, there is a tax amnesty for those who evaded tax. Means what? Now they can invest in stock market by paying just 1% of taxable amount. Okay, so these things you have to get updated on daily basis. You have to read newspapers, you have to look at financial ratios of companies, you have to look at central bank reports and advise your customers. Right. Now, can someone tell me what is this value? This is Norwegian krona. Can someone tell me the value? The fund's market value. I'll tell you a story after that. Can someone tell me what is the value? 10 trillion. Very good. Now, today, that is more than that. Okay. So I recommend you to search Norwegian Petroleum Fund under Google. Then you will get this one, the fund. Click it, you will get this amount. Okay, so when I prepared these slides, maybe, yeah, the value was 10 trillion. Today, the market value of Norwegian Petroleum Fund is 12 trillion. 2 trillion has gone up. What are they doing? Okay, we work to safeguard and build financial wealth for future generations. Let me tell their story. Okay, right. So investment is such a nice thing. Let's once again look at what they want to say. We work to safeguard and build financial wealth for future generations. Okay, so I'm building my fund not for me, but for my future generations. And look at the picture. Future generation of Norwegian. Right. Tell me some of oil exporters in the world. Very prominent oil exporters in the world. Who are the petrol exporters of the world? Come up with some names quickly. I mean the countries, sorry. Countries. What are the countries that export oil? Some other names, quick, fast. Qatar is doing that. Saudi is doing that. Okay. Tell me some other names quickly. Dubai, you don't have oil. You are not exporting oil in Dubai. Okay. Now think about the countries that export oil. Bahrain, yeah, Oman, right, Iraq, Iran. Yeah, in many times Iran was prohibited to sell oil. There were economic sanctions imposed on them. Right. Kuwait is doing that, right. Now, oil exporting countries, they have surpluses of money. Okay. So all these oil exporters, they have a surplus of money. So they start up sovereign wealth funds. For an example, Saudi Arabia, they have a sovereign wealth fund. Qatar, they have a sovereign wealth fund. Can you remember there was a time Qatar was isolated by the Arabian Peninsula? Saudi Arabia accused Qatar to be helping to ISIS, and no transactions were done between these two countries. Then the rest of Arabians followed that. Qatar was isolated, but Qatar is a very small country, but they remain unchallenged. Why? Because they have already invested their surplus oil money somewhere else, and they are making enough income out of that. Okay. Right. Now let's get to our country, Norway. Norway is one of the biggest oil exporters. So there are oil exporters other than in this Arabian Peninsula. Let's say Venezuela, that's a Latin American country. Indonesia, that's Asian country. Okay? So these are oil exporters, even Russia, as you said. Yes. Norway, they found oil in deep sea. The moment they found oil, they understood one thing. They understood they can heavily rely upon oil exporting, and their currency, local currency, Norwegian krona, will be appreciated against other currencies of the world. Okay. Now remember, one thing which we worry today is Sri Lankan rupee depreciating against US dollars and other currencies. But if we find oil today, what will happen? If you find oil today in Sri Lanka, what will happen to Sri Lankan rupee? Appreciate or depreciate? Appreciate. Okay. Now Norway understood the moment they find oil, Norwegian krona will appreciate to such an extent. What will happen next? Whatever manufactured in Norway will be very expensive to the rest of the world. If so, what should you do? You have to artificially depreciate it, like China or Japan. Means what? If you want to sell your manufactured products to the world, it's better to have a depreciated currency. Okay, so Norway understood that, and Norway decided one thing. If we rely entirely upon oil exports, all the local manufacturers will die out, but they can live thanks to oil money. Instead of letting it happen, let's create a fund for oil. So whatever the surplus oil money, we will invest. Where are we going to invest? Initially, that was invested in debt market, later on to equity. Right. So Norwegian 12 trillion krona is invested to entire world, where 9,123 companies in 73 countries and invest in diversified fields. Okay. See every single investment. Right. So you can go to this website and you will find that even Norway has invested in CSC, Colombo Stock Exchange. Okay. So what is happening now? Even if they lose their oil wealth, still they can live just by their investment. So that's what they are doing. That's what their fund portfolio management is: managing wealth for future generations, not for you. Okay. Now let's look at Norwegian Petroleum Fund. They have invested 12 trillion krona. Okay, Norwegian krona, and even then, there were years where the equity failed. That means what? How much well managing you are. There are years the equity market is not performing well. Okay, 2002, 2008, global recession, they could not manage it well. But overall, they are managing it perfectly well. Now, this is how the wealth funds are doing, sovereign wealth funds are doing. Norway is the best. China next. Okay, so Norway, oil exporters, Kuwait, oil exporters, Saudi, oil exporters. Rest, China, a great manufacturer. So this is how their wealth funds are managed. So Norway is investing in stocks. Norway's sovereign wealth fund was set up in 1990s to invest the country's oil riches. 1 trillion fund is 2.7 times bigger than the Norwegian economy. Okay. So the fund itself is bigger than the GDP of Norway. It's worth 140,000 pounds for each resident. Okay. So in political forums, we have seen many politicians, whenever they are in opposition, they say each Sri Lankan is in debt for this much. But here, each Norwegian has surplus of this much. The fund invests in shares, bonds, and property in 77 countries. Means what? They have diversified. It has a stake of 8,985 companies around the world and owns 1.4% of all global equities. Its biggest holders are Apple, Nestle, Google. Okay, so these companies. Right. Tell me, is investing easy or difficult? For you, I'm asking you individually. As you think, now I have shown you many good, nice examples. I'm asking you, is investing easy or not? Say yes, it's easy, or no, it's not easy. That's all. I'm asking individually from you. Do you think, for you, investing is easy? Now I have shown you. If you invested a good stock in demo, you are ending up in losses. Nothing to do with the company. The company is really good company, well managed. Okay, right. Right. Okay. Right. Good. Now, when you find it's not easy, then there is a answer. Easy answer for that. Let someone else manage it on behalf of you. That's where our next heading comes: equity. Unit trusts. Okay. When you find that investing by yourself is difficult, you can ask. You can ask someone else to manage your fund. And there are enough unit trusts who are managing your money. And these funds are managed, these unit trusts are managed by professionals. And I showed you an example. Even though it's difficult for you, for someone, it's not difficult. A Sri Lankan example. Okay. He has invested and he's happy with that. Then I showed you a global example. 12 trillion krona. 12 trillion. Okay. more than the GDP of the country. And they are managing it well. Even though it's difficult for you and me, someone else will do it better. A unit trust is a collective investment scheme which pools, mind you, the word pools, together into one account all the contributions made by many investors with a common investment objective. Okay. Now, one of the drawbacks for you and me is not having enough money. Now, for this person, he has invested millions in a specific company, and his profit is also in millions. But what if I have only 10,000? Okay. What if I have only 2,000 rupees? See this. I have invested with just 2,500 and it has got doubled. Now you and I are not going to market believing we don't have enough money. But to become an investor, you don't have that. You need not to have that much of large amount of money. Even with 2,500, you can do it, but we are not doing it. Why? Even though I have shown you profitable examples, there are many negatives, even for this seasoned person. He has invested in Asian Hotel Property Limited, which is Cinnamon Lake, Cinnamon Grand, Prescott, managed by John Keels. He has purchased at 62 rupees and the market value is 40 and ended up in loss. Now you know why this profitable hotel sector declined for 2 years. You know the reason. First it was Saharan's attack, then continuous attack by COVID. Till then they were good companies, right? So why can't we consider collectively putting up money? Now, when I have only 5,000, 2,000, 10,000, I know it's very difficult to have a diversified portfolio like this. When this person has 24 million, he know how to diversify. But when I have only 10,000, when I have only 2,500, I can't diversify like him, right? In this risky, unstable market, if you want to be successful, you must diversify. But in order to diversify, you must have enough money, which I don't have. This is where I prefer to go for unit trust. So what is unit trust doing? They collect money from a large number of people like me, pool this money together in one account. Then they can take investment decisions. Okay, right. Now, out of all of our money, again, now the investor portfolio manager has 24 million, not from one individual, but from many individuals. But that portfolio manager can diversify. The money is then used to purchase a portfolio of financial securities. Let's look at a diversified portfolio. The first portfolio which I showed you consists only on domestic stocks. He has invested only in Colombo Stock Exchange. But he may be having other investments as well. Bonds, debt instruments, okay, high yield, bonds, zero tax, there are tax exempted ones, money market, international stocks. Okay, so you can diversify. But with my small amount of money, I cannot diversify even within the stocks. Here, a very good investor can diversify into many areas. When I'm investing in equities, again, I can diversify like this. Telecom, plantation, manufacturing, land and property, others, hotels and travels. Okay. Now, before Saharan's attack, this proportion is really good. Hotels and travels were giving huge profit. Now, the moment you see it's no more profitable, you must sell it and move into some other industry. Manufacturing was not a very good industry until the latest development, like import restrictions. Until import restrictions were there, tile industry was just surviving. Now that's thriving. Okay, means what? Nothing is forever. You cannot, as an investor, you will not be able to say, okay, throughout my life I will invest only in hotel. No, hotel sector will have problems. Throughout my life I will only invest in manufacturing. No, there will be problems. Suppose another government comes to power, their thinking pattern will not be only for local manufacturing. There will be a lot of importers who will back next government. So they may shrink the manufacturing again. That's what has been happening in Sri Lanka. Okay. So the investor's duty is not blaming the government, but look into possibilities. Now comes UTs. Since I can't diversify my investment with my small amount of money, since I don't have that expertise on deciding which sectors will thrive, which sectors will die, I hand over my money to a unit trust who will pool large amount of money and move. So what are the parties involved in unit trusts? Number one, unit holder or investor. So that's me. I am investing in very small quantities. So I'll invest 10,000, another month 5,000, another month no investment. So that's us, investors, or in other words, unit holders. Okay. So when you are an investor in unit trusts, what are you buying? We are called unit holders. Okay. Right. So when you become an investor in unit trusts, what do you buy? You are known as unit holders. What do you buy? When I'm directly investing, I'm buying shares or equities. Very good. When I'm investing in unit trusts, I'm known as a unit holder. What I buy is a unit. Okay. Now, in this portfolio, you have purchased directly a share. Valuable one, you have purchased at 27 and the market value is 58. Okay. Another share, valuable Power Ratna, you have purchased at 936 and you have sold it at market price is 840. Another share, you have purchased at 567 per share. Today the market value is 32. Okay. Right. Now, when I'm directly buying, I buy shares, valuable Power Ratna. But when I'm investing in units, my portfolio manager is buying shares, but what I am buying is not one particular share. What I am buying is units. Okay. Number two, fund manager. Okay. So number one, unit holder, that's you and me. Number two, the portfolio manager. Okay. So these fund managers are the decision makers. The fund manager decide, okay, we will sell our hotel sector and move into local manufacturing. Very soon, local manufacturing will thrive. So that's his decision. And at a particular moment, he would say the government will not be able to hold on local manufacturing. Now they will relax the restriction on imports. So we will slowly move out of local manufacturing. So these decisions are coming from fund manager. He prepared the annual reports of the unit trust and he declared dividends. Okay. Then there is a third party, the trustee, the custodian of the unit trust, and to ensure the fund manager acts in the best interest of the investor in accordance with the trust deed, act as a watchdog to protect the investor's money. Okay, so very first day I asked you, will you hand over your hard-earned money? Suppose you have 5 million and your friend, your best friend has a financial requirement of 5 million. Will you hand over your hard-earned money to your best friend? You said no. Then I asked, will you hand over that to a bank? for fixed deposit? You said yes. Then I asked you, why do you trust a bank but not your best friend? Then you said it's regulated by someone else. Same here. Trustee, the watchdog to protect investors' money. Okay, right. Now, investor hand over money to the portfolio manager. Portfolio manager in return can take any decision out of your money. Okay. And he clearly understand you have given him the task because you don't understand equity, portfolio managing. You can't do it yourself. That's why you have handed over your money to him. Now he can play out. There must be someone who is looking after your interest and not allowing him to play out. That is the trustee. Okay. So who are the three parties of a unit trust? There are three parties. Who are they? Investor, manager, trustee. Okay. For the unit trust, you have three parties. Investor, you call him unit holder, then manager, and the trustee. Right. Then there must be a document laid down the terms and conditions. Okay. Trust deed is the legal document that lays down the terms and conditions under which the unit holder's money is to be invested. It also spells out the investment objective and the responsibility of the fund manager. Okay. So there is a legal binding document for the unit trust that is known as trust deed. Okay, so these are the three parties: unit holder, manager, trustee. Unit holder invest, manager buys and sells shares and managing the portfolio. Trustee ensure that the manager works in the best interest of the unit trust. Unit holder provide financial resources, that is money. Okay, a person who is lacking financial literacy giving us money. The manager who is very high on financial literacy manage and administers investment portfolio. Trustee, a third party, will ensure that all assets safeguards interest of unit holders and distributes income. Things are happening in a fair manner. A third party guarantee that. Okay. Now, you are young. Okay. I hope all of you are very young. And from this young generation, I'm asking you a question. What do you like? Do you like to learn the art of investment now, or to hand over this task entirely to a professional? When you are young, like now, do you like to learn the art of investment yourself, or just hand over that to a professional guy? What do you prefer? Okay, very good. Very good. When you are young, look at different options available for you. One very good option is learning to invest. And I have shown you Warren Buffett. He found a very good mentor, Ben Graham. And he has written a book, Intelligent Investor. Warren Buffett read and mastered this book. It consists of very simple strategies. Okay. So in military, they say there is a small book known as Art of War, written by Sun Tzu, maybe 2000 or more years ago. It shows very simple things, very simple strategies. Okay, so like if you have 4 soldiers, okay, and if the enemy has 1 soldier at that moment, what will you do? You will encircle him and capture him. You have 3 soldiers, enemy has 2 soldiers, so you can fight with him. You have 1 soldier and enemy has 5 soldiers. Best avoid fighting and disappear. Very simple things. In this book, Intelligent Investor, very simple things. If you invest in companies that are known to you. Okay. Now, if you invest in companies that you don't understand, you are creating a problem. Right? Since I showed you some good examples of Colombo Stock Exchange, let me share you some bad examples as well. Okay. In 2011, stock market was performing extremely well. Shares were bubbling. What was purchased at 10 rupees, you can see trading at 400 rupees. Okay. Now here I showed you what you have purchased at 60 rupees, trading at 400 rupees, but for justifiable reasons. Dividend yield has gone up, company is performing well, and Sri Lankan rupee has depreciated. Your export market is good, justifiable reasons. But 2011, what was trading at 10 rupees few months ago, now trading at 400 rupees without any reasons to justify that. Okay. Right. And there were a lot of newcomers to the market like now. Okay. These newcomers do not understand anything, but the moment they make a profit, they believe they know everything. Okay. So they have not learned the art of investing, but they have learned the word of stockbrokers. The stockbroker says, okay, buy this, sell this. Buy now, you can make 20%, sure, sell it when I say it. And you do just the same. And you think I'm smart. Okay, so it's like you're following the Pied Piper. I hope you have heard this story as a small kid. The Pied Piper, when he blow his music instrument, all the rats in the town followed him. Next, all the children. Okay, so the investors were like the rats saw children following the Pied Piper, and finally find yourself, yeah, captured in a cave, dark cave. Right. We are talking about unit trusts, and we looked into the 3 parties. What are their duties? When you don't have this third party trusting, it's like you are investing with the assistance of your broker. The broker tells you to buy and you buy. The broker tells you to sell, you sell. 2011, all of a sudden, there was an interest in a company called Greg. There was a listed company in Colombo Stock Exchange. It was trading at 10 rupees and everyone want to buy it. Greg. Okay. Now my question is, have you heard a company by this name? Just say yes or no. Okay. If you do not know a company like this, best thing, don't buy its shares. But no one knew what is this company. It's a listed company. All of a sudden, a foreign investor purchased a large quantity of this company. Now there are a lot of rumors in the market. This investor is having platinum plants in South Africa. He's an extremely rich guy. He want to make these products with Greg. Lot of stories. What was trading at 10 rupees went to 20 and finally reached 120. Right. Only stories. Then he came up with warrants. For the very first time, we came up with this nice term, warrants in market. Now everyone is buying Greg warrant. And one fine day, you find, if you invested 10 million in market, in warrants, one fine day, you will find entire 10 million disappeared into thin air. Okay. Now the foreigner finally sold his stake and left. He even sold a good quantity of foreigns to the innocent Sri Lankan investors. I told you the story of monkeys and the tourists. The same happened. Okay, right. So in order to avoid such things, you can move into unit trusts with the belief it's managed well and regulated well. Types of unit trusts. Number one, you have gilt-edged funds. Okay. You have money, but you are not a risk taker. You prefer no risk at all. Then this is what is ideal for you. Norwegian Petroleum Fund, when they started, they did not like risk at all. So they invested their excess oil money only in treasury bills and treasury bonds of good economies. So what are these good economies? Not Greece, not Zimbabwe, not Sri Lanka, but US and few other European countries like German, UK. Okay. And after many years of investing, they found they are not doing well. When they compared with Qatar, when Qatar is growing at 20%, Sovereign Wealth Fund was growing at 20%. Norwegian Petroleum Fund is growing at 2%. Steady, no risk, no return at all. So they decided, Norges Bank or the Norwegian Central Bank, Norges Bank decided, we will buy shares from equity market as well, but it should be managed well. Now, if you look at this Norwegian Petroleum Fund, unlike any other fund, they have this one, responsible investment. The fund exists to help finance the Norwegian welfare state for future generations, not now. The future value of the fund depends on sustainable growth. Mark the word sustainable growth, well-functioning markets and value creation at the companies we invest. Okay. Responsible investment. We invest only in a responsible manner. Sustainable long-term growth. Our motivation for responsible investment is to achieve the highest possible return with moderate risk. Yes, we undertake risk, but it's not gambling. It's a calculated, moderate risk. Companies' activities have a considerable impact on society and the environment around them. Mind you that. When China is giving us a loan, they are not worried about the impact on society or environment. Therefore, it's really good to take loans from them if the loan taker can take care of the society and the environment. The lender is not interested in that. But here, no way. Whenever they are investing, they looked at the impact on the society and the environment by the company they are investing. Suppose the company is into child labor, immediately they sell it, even at a loss. Over time, this could affect their profitability and so the funds return. They believe any company that is not looking at environment and the society will soon fail. Okay. We therefore consider both governance and sustainability issues and publish clear expectations of companies in the portfolio. Okay. The fund invests for the long term, globally, widely, right, but ethically. Okay. Right. Now, Norwegian Petroleum Fund was initially a risk averse. When you are a risk averse, the only option available is investing in government securities. So the first unit trust, type of unit trust, even for your exam purpose, if you asked what are the types of unit trusts, Number one, gilt edge. Gilt edge means golden edged. Okay, so those days, when you purchase government securities, you are given a certificate. Around this certificate, there is a gold color frame. So you call them gilt edge funds. So as long as governments are there, your fund will not fail. These funds invest in gilt edged securities, which are issued by states and central governments. So what they issue, bonds and treasury bills, have different maturity profiles, short term and medium term or long term. Gilted funds differ bond funds because bond funds invest in corporate, where gilt edge only invest in government securities. Gilt fund stick to high quality, low risk debt, mainly government securities. Okay. So the first type is gilt edged funds, and you know that they are only investing in government securities, and it's ideal for risk averse. You are guaranteed a return, but the return is very low. Number two, income fund. These funds invest in fixed income security that provide high return than gilt edged securities. Okay, fixed income means what? When you invest in Colombo Stock Exchange or any stocks, there is no fixed income. Okay, I showed you demo. This year may not be doing well, but suppose government allows all of a sudden to import vehicles and the share price goes up. It's not fixed, right? Your income is not fixed, it's fluctuating. Now you have seen Talawakali plantation is doing very well. Will it be able to maintain the same momentum with this fertilizer issue? I do not know, right? So it fluctuates. Unlike that, if I invest in fixed deposit of a bank, I'm guaranteed a return 6% per annum, 4.5% per annum. So that's fixed. So the income fund invests only in fixed income. So invest in corporate bonds, treasury bills, bank deposits, and repurchases. These funds regularly pay out a dividend either on a semi-annual or annual basis. So that is investing in the second type, income fund. We talked about repo. Repo is something like this. Say I have a gold chain, right? And I don't have money in a particular day. So I hand over my chain to my best friend and say, give me 10,000 rupees, you keep this chain. But after 1 week, I'll pay you 10,200, okay? With 200 rupees interest. On that day, please give me my chain back to me and accept my money, 10,200. He agrees. So my asset moves to my friend's pocket or to his neck just for 1 week. After 1 week, I repurchase the same necklace I gave him by charging 200. That is repo. There is a seller, there is a lender. Okay. The only difference here, the collateral is not a gold chain, but a financial asset, a paper, treasury bill, or the government security. So government security becomes the collateral, and the seller agrees to repurchase. Therefore, we call it repo, repurchase agreements. Third one, balanced funds. Now, the first one, only government securities. Next, income fund, that only on debt instruments where the income is fixed, say interest. Third one, balanced funds. Aim is to provide the investor capital appreciation along with regular return. Okay, now what is capital appreciation? Okay, here I have invested at 1630 and I get 47. Okay, now suppose you invested 3.6 million and you get 10.4 million. Your capital appreciation is 6.7 million. Okay. Now, when you think about gold, gold price has also gone up. It has given immense capital appreciation, but only capital appreciation. Suppose you have invested in fixed deposits. You have invested 1 million. Even after 5 years, you will get 1 million. In addition to that, okay, you will get an interest, which is agreed upon. But you don't have any capital appreciation, just interest. Gold, you have only capital appreciation, no interest, right? Then it comes to fixed deposits, only interest, no capital appreciation. Talvakale plantation, you have capital appreciation of 6.7 million plus a dividend. Let's say they pay about 6 rupees as dividend, 1.2 million dividend yield, not bad. Okay, so you get both capital appreciation plus dividend. Now, balanced fund aim is to provide investor capital appreciation along with regular return, like what we said with this Talvakale plantation example. Capital is appreciated. You have invested 3 million, you get 10 million along with regular return, and throughout the time you get dividend. Fund consists of equity and fixed income security. In order to reach this fund consists of equity, shares, and fixed deposits. The proportion vary depending on the market condition. Yes, the proportion is changing. Right? So I showed you when we were discussing on stocks, I showed you that the markets are fluctuating. And I showed you when the interest rate goes up, market comes down. When the interest rate goes down, market comes up. There's an inverse relationship between share market and market interest. Okay. I showed you this one. From 1994 to 2002, market interest rate was very high and the stock market performance was very low. Okay. So when you have both these, the proportion must vary looking at the market condition. Okay. During this period, your proportion should be extremely high on fixed income or fixed deposits, where equity proportion is less. But after 2002, your interest on fixed deposits, your proportion on fixed deposit should shrink, and your proportion on equity share investment should go up. Then only you can become very successful in investing. Okay, so you can see we are not blaming any government. Investor is not interested in blaming any of these government policies. What was happening in 1994 to 2002, that's their government policy. But being the investor, you will get the best if you have moved out to debt instruments. Fixed deposits, banks were giving superb fixed deposits. Right? I can remember one company, say John Kills Holdings, they came up with a rights issue, and after fully subscribing, they decided market interest is very high than investing. Okay. In one of the annual reports, I can remember, they showed their return other than transportation sector, logistics sector. All the other sectors were not giving the benchmark return that was treasury bill return. So it's extremely good to just invest in treasury bills without doing anything. Okay. So you decide the proportion looking at the market condition. A dividend declared mostly on annual basis where capital appreciation take place in medium term. Okay, so far we talked about 3 funds. What are they? Gilt-edged. They invest only in government securities. Number 2, income fund. They invest in government security plus fixed deposits. Okay. Number 3, balanced fund. Now we have capital appreciation and dividend. You invest in stocks as well as government securities, equity and fixed income. Now comes indexed funds. Now, our example, I think he has invested almost in all companies in Colombo Stock Exchange, sometimes one share. Okay, remember this. You can even invest in single shares or 2 shares, right? So he seems to be very careful in selecting. He has purchased 2 shares in Singer at 133 and the share price has dropped to 60. Means what? Even though he has purchased at a very high price, he knew the price is very high. So he may have purchased for the purpose of annual reports. When you are a shareholder, you can ask annual reports. By reading annual reports, you will know where the companies are heading and whether the market price is good. So it does not mean Singer is a bad company. It's very good company, performing very well. But for him, he has avoided a high price, and just for annual reports, he has purchased few shares. And whenever the time is right, he may rethink. Okay, Shalimar, 919, and the price has gone up. So that's a palm-related company, oil palm. Okay. See this, yeah. Okay, so he has invested in many companies. Okay, so it's difficult for him to manage them. He has to read all these annual reports, look at which to sell, which to hold, how to improve. Okay, so it's very difficult task. Right now comes a solution for such investors: indexed funds. Okay, invest in the same proportion of a particular price index. Say in Sri Lanka, S&P SL20. You have to invest only in 20 companies. Okay, here he has invested, I think, almost in all companies. Then he will decide, okay, I'm improving on this side, I'm selling this part. Okay, instead, there's an easy method. You purchase only 20 companies listed in S&P SL20 and buying the same proportion. So what happened? When S&P goes up, your fund value goes up. When S&P comes down, your value comes down. Fund manager can't find investing into the same stocks of the S&P fund. So this is introduced by an economist known as John Bogle. So after many years of researching, he came up with this. You will almost never find a fund manager who can repeatedly beat the market. Okay. Now, sometimes you can see, okay, this particular person has beaten the market in few shares he has selected. Very good. But naturally, we doubt his ability to beat the market forever. That is not happening. Okay, it is better to invest in an indexed fund that promises a market return. So you are not going to beat the market. Means what? If Colombo Stock Exchange grows by 20%, and if your portfolio has grown by 50%, you have beaten the market. So instead of doing that, why don't you go along with a selected market? That's what John Bogle says. If you have trouble imagining a 20% loss in the stock market, you shouldn't be in stocks. Okay. So that's the risk he's showing. If you are investing, you're undertaking a risk. So if you can't bear that, go for the unit trust. Investors as a group cannot outperform the market because they are the market. That's a very good statement. So investors individually believe I can outperform the market, but he's part of the market, so he can't beat himself. And from that theory flows the reality. Investors as a group must underperform the market because the costs of participation constitute a direct deduction from the market's return. That essentially is all you need to know, understand why index funds must provide superior long-term return. Okay. Individually, you will find it difficult to beat the market. If so, it's better to confine yourself to a fund, indexed fund like S&P, instead of trying to diversify to such an extent and finally find that you can't read all the annual reports. Okay, so luckily in Colombo Stock Exchange, you have about 220 companies listed. So if you read one annual report per day, it will take 200 days to read and understand your investment, which is very difficult? If so, go for this easy path. That's what John Bogle is saying. Select 20 companies listed under S&P, and your portfolio will move in the same direction of the index. So you call it indexed fund. Fifth fund, money market fund. Invest in short-term fixed income securities as treasury bills, bank deposits, commercial papers, asset-backed securities, and repos. These funds are used to park temporary funds of individuals and companies. Okay. These funds are liquid like savings accounts and offer higher returns. Dividends can be paid more than once within a year. Okay. So you have 5 types of unit trusts, and this is the last one, money market. Okay. Now, what are the advantages? Diversification. I showed you the example. I showed you an investor who has diversified and getting the best. By now, he has diversified heavily into plantation and manufacturing, and that's where Colombo Stock Exchange is giving you good advantage. He has shrinked his part in hotels. Means what? He know how to diversify. Okay, you have been in different fields, and when the market shows your direction, you maximize on that and shrink your contribution to the industries which are on risky side, like hotel sector. Diversification. Many investors lack sufficient resources to establish adequate diversification on their own. Okay, now that investor has 24 million to invest, which you and I may not have. If so, what is our best alternative? Diversify. Number 2, funds with variety of objectives. Different people come to market with different investment objectives. Someone wants to remain in the market for 10 years, another for just 6 months. Okay, so different types of funds are created for different investment objectives. So investors should have no problem finding funds that meet their objectives in terms of return and risk. I showed you gilt-edged securities. If I'm a senior citizen, say I'm 90 years old, okay, my days are numbered, and I don't have any objective of remaining in the market for a long-term return. I'm only worried about my health. If my objective is like that, I may go for gilt-edged securities. So under unit trusts, different type of investors can decide different type of unit trusts. Record keeping. I showed you a particular example where the investor is having invested in almost like 200 odd companies. So he must be keeping a superb set of records. Okay, so whenever he buy, there must be a receipt, and whenever he sells, whenever the dividend comes, okay, then his analysis, then a huge number of annual reports, quarter reports. My God, he must be having huge library himself. Record keeping. The management company maintains and administers the records of shareholders' activity for the given year. This is great convenience for the investor. Very good. Professional management. Fund managers who are knowledgeable about investment and they have good track records of performance, high integrity, etc. Okay. So fund managers, they have good track record of performance, high integrity. Right. So these are the things we are looking at. So whenever we try to invest, we look at the integrity of the person to whom I'm handing my money. So there are good fund managers. Their name is known for the industry for a longer period. High liquidity. Now, when I directly invest in shares, still I find illiquid shares. If I have invested a considerable amount of millions in Lanka Ashok Leyland Company, I find it's very difficult to sell because the share is not liquid. But when it comes to unit trust, at any given moment, I can take my money back. So they are liquid. So this is another advantage of unit trust. Unit trusts can be bought and sold easily. Thus, they do not suffer from liquidity risk. No, at any given notice, you can take your money back. Affordability. Okay. Even with 5,000, 10,000, you can start up. Affordability. Only a small amount of money is needed to participate in a portfolio investment, which enjoys the same benefits as direct investment, which requires large amount of capital. Here, I showed you the example 24 million he has invested, but I'm going to invest just 20,000 and I get the same benefit, same diversification, same rate of return. So it's very affordable to me. So these are the advantages. Okay. Now I like to share some issues in the markets. Okay. We all, whether we are living in Sri Lanka or whether we are living in USA, we have to be very careful when we are selecting investments. Okay. There's a very high probability that we will be carried out by media. You know how media behave, right? Now, last week I showed you an announcement, which even when I was trying to show it, I was not aware what was inside it. I showed you an example, Extra, a fertilizer company, and a public announcement. The announcement says about a ship that has come to Colombo Harbor carrying their stuff, urea. But the same day, I read in Facebook, a ship without owner has come to Sri Lanka, and so many other things. Right? So we get carried away by social media and the public media because people come with different intentions. Okay. In US, there was a company called Enron. In your free time, just study about this company, Enron. There are even documentaries in YouTube, even reading materials about this company. Okay. Very simply, Enron is a company that was into energy, and they found some loopholes in financials, and they played with that. They always made profits, but they were very careful not to publish cash flow statements. Their share price was continuously going up. The company CEO was directly asking general public, why don't you buy my company's shares, which are growing at this alarming speed? Our capital gain is this much. Why don't you buy our shares? Something like that. He's always asking. And the company, though the financials are always good, is ill-managed. The company is audited by Arthur Andersen. It's a very old auditing firm. Everything is fine. But a journalist came up with certain questions, and the CEO became very angry with that. And very soon, the journalist showed insight of this company. As a matter of fact, the company collapsed. Arthur Andersen, the auditing firm, which was 100 years old audit firm, they burned down the audited documents. Okay. Now, during the days where this Enron company was performing, they had a problem with Mayor of California. Okay, so like in Sri Lanka, now we have in Sri Lanka the rice mudalalis, how they were running the rice business and how the politicians found it very difficult to handle the issue. The same in US. There were all of a sudden power cuts done by Enron because Enron wanted to increase the electricity bill. The mayor was against that, and mayor threatened, I will come up with the team and check whether these electricity interruptions take place due to technical issues or whether you are creating that. And Enron was having a very tough time with the mayor. For the next election, Enron backed the bodybuilder, Arnold. And Arnold became the mayor because they backed him. That's where democracy takes place. The rich may use your mind for their own advantage. Okay. And here we are looking at Madoff investment scandal, something similar to that. Okay, just read it. Madoff investment scandal was a major case of stock and securities fraud. Okay, so in stock markets, there can be frauds. Read it. In December of that year, Bernie Madoff, the former Nasdaq chairman and founder of Wall Street firm Bernard L. Madoff Investment Securities, admitted that the wealth management arm of his business was an elaborate multi-billion-dollar Ponzi scheme. Okay. I think we have to talk about Ponzi scheme. Okay. I'll talk about Ponzi scheme created by Charles Ponzi, maybe today itself. First, we will go through these slides. Okay. So Madoff scam ended up with $5 billion fraud. Madoff Investment Securities. Okay, he was the chairman until he was arrested, and the firm employed brother, sister, daughter, right, a family company, right. In very simple, whether you are living in US or in Sri Lanka or any other country, when you hand over your hard-earned money for investment, you have to be very mindful about the people who are managing that. Okay. When a company is performing extremely well, you have to be very careful. Can it happen? Can a company continuously beat the market? When a particular investor continuously making profits, you have to be mindful. Can it be real? Has anyone heard about Raj Rajaratnam? Say yes or no. Has anyone heard about Raj Rajaratnam? Okay. Okay. Right. There's a book called Apprentice of a Billionaire. Apprentice of a Billionaire. Okay. Rise and Fall of Raj Rajaratnam. Raj Rajaratnam. Raj Rajaratnam is a Sri Lankan born Jaffna Tamil person who went to US and started an investment fund known as Galleon Fund. Okay. This Galleon Fund was making profit continuously. In year 2008, there was a financial crisis in the world, and even Warren Buffett's fund had certain drawbacks, but not Raj Rajaratnam's Galleon Fund. And FBI was suspecting him. FBI was behind him. They found each and every time there is going to be a merger or acquisition of two companies, Raj Rajaratnam was buying huge quantity of their shares. And when the announcement comes and when the market price goes up, he sells them. And he has been doing that continuously. That's the issue. A person can be right once or twice, but always right was the question. So the FBI, for the very first time, got wiretape evidence and proved a case against him. So FBI first suspected whether Raj Rajaratnam, being a Sri Lankan, whether you are Sri Lankan, Indian, Pakistan, Bangladesh, when you are in US, you are called Indian. So FBI was first suspecting whether Raj Rajaratnam, being an Indian, is having contacts with the CEOs of all Indian CEOs of Silicon Valley and other large corporates of US. And they found no, he is not even telephoning them, no mobile phone records with them. And they finally did a very simple thing. Okay. On top of each fax machine of these companies, they fixed a recorder. And they found before these companies' faxes are faxed by an office assistant, basically an Indian or a Sri Lankan or a PN. Before faxing to SEC, they are faxing to Raj Rajaratnam. Then only they fax it to SEC. This is the network he was maintaining. So he was proved guilty for insider trading. Insider trading. And he was jailed for that. I recommend you to read this book, Apprentice of a Billionaire, Rise and Fall of Raj Rajaratnam. Right. That was on insider trading. What is insider trading? What is insider trading? If an investor takes advantages of having access to market sensitive information before general public, that is known as illegal insider trading. What you say is correct is access to non-public information. Okay. If you get access to market sensitive information well ahead of general public, and if you take undue advantage out of that, that is known as illegal insider trading. Who gets such information? The directors of the companies, and sometimes maybe a share underwriter or the investment bank may get such information. I'll tell you one simple example again in Colombo Stock Exchange. Ceylon Merchant Leasing share was trading, say, about 5 rupees per share. And People's Leasing, which was not a listed company, was negotiating with Ceylon Merchant Leasing to acquire the company. So the share price was trading at 5 rupees, but they had a very good asset value. And People's Leasing finally bought the company at 25 rupees. Immediately, when the announcement came to market, immediately share price went up to 25, then continued until 300 rupees per share. Okay. Suppose either you are a director of Ceylon Merchant or People's Leasing. When you know what is trading in the market is worth 25 or more, you can buy at 5. Okay. Suppose you purchased 1 million shares at 5 rupees. Your cost is 5 million. And you are given 2 days to settle. T plus 2 means what? Even without investing a single cent, you can buy 1 million shares at 5 million rupees. After 2 days, it goes up to 25 million. You can immediately sell it for 25 million and you bag a profit of 20 million without putting a single cent to the market. That's very unfair. That is known as illegal insider trading. That is punishable offense. That's what Raj Rajaratnam has been continuously doing. Okay. Now we'll move into our slides again. Ponzi scheme. There was a guy known as Charles Ponzi, an Italian immigrant to US. Okay. A Ponzi scheme is a fraud investment operation that pays returns to investors from their own money or money paid from other investors rather than from actual profit earned. Okay. I'll make it very simple. Right. Now tomorrow, I'll start up a investment company. And I would say, per month, I'll pay you 10%. In short, per annum, it's like I'm paying you 120%. So when you come to know that, you invest 100,000 with me. Right. So today, you invest 100,000 with me. After 1 month, I'll pay you 10,000. How? I don't do any business. I take your money, keep that money in my locker, and at the end of the month, out of your own money, I'll pay you 10,000. Now I have 90,000 remaining. Now you go to your best friend and says, look here, there's a guy, go to him. He will give you 10% interest per annum. And I'm sure of that because I got it. Now your friend comes with another 100,000. Now I have 190,000 in my locker. Next month, I pay out 20,000, 10,000 to you, 10,000 to your best friend. Now I have 170,000 in my locker. I do nothing, right? I pay your money to you. But when the news spread, I get more and more money. So what is happening? A Ponzi scheme is a fraud investment operation that pays returns to the investor from their own money or money paid from other investors. Okay. The more and more people come to know that, the more and more money I have. But I don't do anything to make a profit. One fine day, I'll disappear when I have accumulated an amount that makes me happy. That is known as a Ponzi scheme. Then there is another nice investment fraud taking place known as pyramid. This is what is happening. I start up an investment company and I come with a product. It can be a Mondial, a wristband, or a solar battery, solar panel, a wristwatch, or a gold coin, anything. Okay. I create a firm and recruit 6 people. For recruiting these 6 people, I am asking them to bring me 50,000 each, right? And buy my product, let's say a wristwatch. So first you have to pay me 50,000 and I'll give you a wristwatch worth 2,000. 48,000 my profit. Okay. Then what I'm asking you, in return, you each should bring me 6 more. And the circle goes down. First layer 6, that 6 in return get another 6, 36. That 36 each get another 6, 216. And when I reach here, I don't have wristwatches. Maybe here, I don't have wristwatches. So I sell only a hope. I give a piece of paper and say, okay, you are entitled for a wristwatch from the next shipment. Okay. And I get money. The more steps down you go, the more money I earn from the top. But the unfortunate fact is, even to go beyond 13 steps, the world population is not enough. Okay. So this is known as pyramid scheme. This is how a pyramid works. So there is a top guy who recruits 6 people down and everyone is recruiting someone else. Even to go 13 steps down, the world population is not enough if you go with 6 multiples of 6. The company would charge high entry fee. This is the only company, first you have to pay. In all the other companies, first you will get an appointment letter and after 1 month working, you get a salary. Here, you pay a salary to the recruiter first. That is the only company. And you cannot continue like this. Okay. So we conclude shares and unit trusts today. Okay, I got a question. Please explain about insider trading again. Right, very simple. When a company performs best, naturally its share price goes up. Sometimes a company performs best because they take some good decisions, right? For an example, let's say People's Leasing Company decide to purchase Ceylon Merchant Leasing Company from Colombo Stock Exchange. We call it acquisition. One company is acquiring another company, right? When you are acquiring another company, that information is not known to the general public. So there is a prolonged decision going on. People's Leasing is saying, our intention is to buy your company. Then Ceylon Merchant Management and the directors are discussing with the management of People's Leasing. At what price are we going to shake hand? At what price are we going to end this deal? Okay. But market is not aware of any kind of transaction that is going to take place. Market unknowingly, they exchange the share at 5 rupees each. So the share price of Ceylon Merchant Leasing, SMLL was the code, was just 5 rupees. But their asset value is extremely high. There are companies like that. Let's say asset value is 20 rupees. Okay. So the seller, Ceylon side, they say, We are not ready to sell at the market price. Okay, we are ready to sell only at 20 rupees. Finally, PLC, initially they would say 30 rupees, finally they settled to 20 rupees. Now both the insiders, means the top level of Ceylon, top level of PLC, they both know what is traded in the market would be traded at 20 very soon. And the general public is not aware of it, right? And the general public sell at 5 rupees. I, being a person having all this information, I buy shares from you, right? Something worth 20 million, I buy from you at 5 million. And after 2 days, I sell it at 25 million, right? How did I make this profit? When I showed you this investor, he has been investing for a long time, reading lot of annual reports, taking lot of time, okay, analyzing, right? Even if you have not invested, he buy just one share of Celsing and study what the company is, right? No, I'm not doing any of these things. I have one sure shot. I know if I buy at this, I can sell at this. That's all what I know. I don't want any analysis. And immediately I become 20 million profit taker. Okay. From what? By having access to non-published information. So that is known as insider trading. Okay. Having access to unpublished information and making a profit out of that in an unfair manner is known as insider trading. Okay. But then let me tell you another story. After that, I'll link with stock market, because we will move into pawn brokering, venture capital, leasing, hire purchasing, margin trading, and many other products from next week onwards. So far, we have covered insurance, then stock market, then unit trusts. Right. The stories. Once again, I localize it. Many Sri Lankans believe in horoscopes. Okay. As per horoscope readers, there is a planetary situation known as Saturn or Senasuru. Right? And people believe when you are under the Senasuru Mahadasha, you will be facing problems. There was a very good farmer who is making profit out of farming business. And he happened to undergo this Saturn era. So Senasuru appeared in front of this farmer and said, Mr. Farmer, now you are under my dasa or my time period. You are under my control. I warn you, whatever you grow will not bear fruits. Whatever you grow, Mr. Vegetable Farmer, will not bear fruits. Okay. So now that's a terrible shot for the vegetable farmer. Think about the vegetables, pumpkins, brinjals, okay, ladies' fingers, whatever you grow, you will not have vegetables, fruits coming out of that. So the farmer, without any problem, decided, I'll farm potatoes. No fruits, no vegetables, but you got potatoes. And that season he won. Once again, the Saturn appeared to him and said, okay, fine, I was beaten by you. I put the rule, but you found a loophole. Next time, whatever you grow, you will not find neither potatoes nor vegetables. This time, he came up with green leaves, kangkung or something. And once again, he won. Next, Saturn appeared in him and said, okay, whatever you grow, you will not be able to sell leaves of it. No fruits, no flowers, no potatoes. This time, the farmer planted bamboo and he sold only the timber. Okay. Now the last time, there's a time period for Saturn. Then Saturn said, okay, fine. I'll ensure one thing. Whatever you grow, you will not be able to sell leaves, green leaves, fruits, vegetables, or even uh, potatoes. And there will not be thick timbers to sell. This time he grew mushrooms. Okay? Means what? Whenever the regulator comes up with a ruling, a direction, the manipulators always find a loophole. Now I link that with CSE, Colombo Stock Exchange. 2011, Colombo Stock Exchange was the second best performing, and the market was almost a bubble about to burst. And CSE is looking at all the possible venues of preventing that taking place. And one fine day they found a company known as Blue Diamonds. Let's say if its authorized capital is 20 million, right? But per day, the trading volume is 60 million. Means what? It's like the entire capital is traded 3 times within a day, right? And the share price was appreciating and the company has nothing to do. So they came up with a nice idea. Price band. Means what? The share cannot move more than 10% up or down within a day. Now, those days, let's say People's Merchant Bank, what was trading at, let's say, 30 rupees in the morning, ended up at 90 rupees in the evening. Right? So if you have 1 million invested, you have 3 million within day. Okay. So they came up with price band. What is that? Only 10% increase per day. So if it was People's Merchant Bank and trading at 30, maximum it should reach 33, just 10% per day. Right? By that time, there were some warming up shares. Dankotu Porcelain was one such, right? And there was, DPL, Dankotu Porcelain. The moment price band was announced, share price dropped each day minus 10%. And the price band was there for 10 days. After that, it has reached its natural price. Means what? Price band worked. Until when? Until another bubble came east-west. There was another share listed in Colombo Stock Exchange, east-west. It was bubbling up. Now, they found an advantage of this price band. Each day, at the moment the market started, it reached 10% up. And everyone want to buy, no sellers at all. Very next day, another 10% up. 10 days, another 10% up. Each day, 10% goes up. Now, after 10 days, there's a relaxing. The moment it's relaxed, it went to 20% up. Means what? The manipulators, they always find loopholes within the rules, like the farm and the Saturn. Okay? They find a loophole and play it. So it's extremely difficult for the regulator to keep up with the advances taken by the manipulators. That's where financial literacy matters. The more you educate your investor, they will not fall into these traps. So insider trading and this kind of manipulations are taking place in markets. That always create problem for fair trading. Fair trading means what? We all have to have similar access to information. On such, investors like this, long holders, they get access to different types of information and they take time, carefully evaluate and win. That's a fair trading. But what is unfair? the investors who know nothing about the market have some information link. Okay, this company is going to be acquired by that company, and before anyone comes to know that, they comes to know it. They don't have this much of portfolio, investment time, reading, nothing. All of a sudden, make a killing. Okay, huge profit, like Rajaratnam has been doing continuously. These things should be avoided. Okay, so in this extent, whenever market sensitive information are about to be released, even employees should not buy or sell shares. So the companies come up with such rulings to ensure fair trading takes place. Okay, then yeah, then you can see investment is a profitable business, but you have to be more financially literate. And as you said, you are young. When you are young, you have time assisting you. When you are old, time is not a factor that is helping you. Now, you are learning banking and you are learning subjects like accounts, okay, and reading financial statements. Then you are looking into many other disciplines like economics. Then you will understand Sri Lankan economy, GDP, inflation. With that knowledge, you can simply apply them slowly by starting up a simple investment. And as I told you, either you can go for unit trusts or you can directly invest. When you go for unit trusts, you are well managed. Why? Someone who is having a good experience, professional qualification, and looked after by a trustee is investing on behalf of you. But you will not learn from that. You will become just a passive investor. But if you try yourself when you are young with very simple amounts, I showed you, maybe just 400 rupees, okay, maybe just with 10,000, you start up and read financial statements, go to Colombo Stock Exchange, then you will look into websites like this. The moment you start up, you want to know further, okay, what is Norges Bank? How are they managing, right? Why they want to look at ethical things. So you're learning. Something is forcing you to look into the world you are living, the financial world that you are living. Okay. So you see the map, you can see the countries. Luckily, Sri Lanka is among the selected countries in the world. Okay. Then you can take your time, search Sri Lanka, what are the companies they have gone and invested. Okay. And yeah. Then we talked about other sovereign wealth funds. You can look into that. Okay. Then think about why our own market. Okay. So when now we have seen Colombo Stock Exchange, how it was performing, and I predicted it will surpass 8,000, and that happened. Now it's your time to look into market and predict yourself. You must develop that ability. Okay. Right. So with that, I'll end this session on investments. Next week, we'll take another product and look into that. And after that, we'll have some question and answering session as well, because I have to prepare you for the exam as well. So we talked about NBFIs, we talked about insurance, we talked about stocks, and we concluded unit trusts. What are the type of unit trusts? What are the three parties involved in unit trusts? Okay, what are the advantages of investing through unit trusts? These kind of questions are possible for your exam. So I have to prepare for that as well. Go through these slides and prepare. With that, I'll end today's session. Thank you.
Thank you, sir.
Okay, thank you.